It's good to be positive when no one else is, I suppose. That tends to be a good time to be accumulating. But what I would say is three things. One, Canadian economy and Canadian stock market, depending on which parts of the Canadian stock market you're investing in, not really the same thing. We're invested largely in cross-border infrastructure players. As we talked about with this whole AI move, there is a lot of demand for infrastructure, power infrastructure, utility infrastructure, and we think that that's not just related to AI. That's related to reshoring and manufacturing activity and changes in global trade patterns, especially with who's in the White House, and as well as, warmer climate, more air conditioning demand, EVs, a lot of change to electrification. So we don't think that stops. And there's a lot of Canadian companies that participate on a cross-border basis. Now with a reduced Canadian dollar, that's when they translate those earnings back to Canadian numbers, I think Q4 is going to be pretty spectacular in terms of the drop in the Canadian dollar versus those US dollar earnings.
For what companies? Are you talking about particularly oil exporters?
Oil for sure, but we think the utility companies, so the Fortises, the Enbridges, not necessarily a utility company, but utility-like. AltaGas is another one we hold with significant US dollar revenue exposure. So we think that's positive. And the other thing is, we're optimistic on a leadership change here in Canada. We've had 10 years of, a bit of a anti-business, higher regulation, not a poor sentiment around Canadian investments with what happened with the Trans Mountain expansion and how it had to be, basically rescued or taken over by our government. We think that hopefully that starts to alleviate a bit of a sentiment decline. And so again, you've got a cheap stock market, you've got a lot of cross-border revenue translation flows back into Canadian dollars, and hopefully a more friendly business climate.